Good morning. Welcome to IG's Early Morning Call. It's Wednesday, 28th of June. Let's take a look at the headlines as we await the start of today's European session, where we're looking for gains across the board on the European markets, but we got declines for the Australian dollar, down on the weaker consumer price inflation data that we've seen out today, as we see a pullback in the expectations for further interest rate rises from the Reserve Bank of Australia. Oil prices on the way down. We've got demand concerns worrying the markets at the moment. Central bankers are continuing to emphasize the potential uptick, further uptick in inflation, or certainly inflation not pulling back as they'd hoped, though we could well see continuation of the rise in interest rates. And this brings about expectations of a further dig down into potential contraction for economies around the world. And there's relief on the sugar market. We got sugar on the way down again yesterday on news of strong production numbers coming through from Brazil, which is easing some of those concerns about the supply-demand balance. Take a look at volatility. Yesterday, we saw a new 3-year plus low for volatility, and we continue to dig down 15.96 below the 16 mark for this index here. Which means that people are looking for risk assets to buy. The FTSE 100 is one of the poorer performing indices. Part of this, I guess, is because we've got a drop in these mineral businesses. We've got a drop in minerals broadly, with oil down, with copper down, with aluminium down. Some of these big component parts of companies that trade on the FTSE 100. You can see here we're now, and have been for some number of days now, below the 200-day moving average. I've got this line at 74.32 on here as a line of support. Despite the fact we saw gains yesterday, fractional gains, the gains in London were not as impressive as those in the German and French markets, but we got a build on that today at 74.88. So expecting a stronger start in the London markets today. Same on the German DAX, bouncing off this line of 76.4% retracement at 15,817. The German DAX up for a second day in a row, and gains in the French markets as well yesterday. And you can see bouncing off this rising line of support that we got in the French CAC 40. Let's take a look at what's been happening overnight in the Asia Pacific markets. Just a quick run round of some of the markets there, with gains of almost 2% on the Nikkei 225, and same sort of 1% plus rise on the Australian ASX 200, little move on the Hang Seng stock index. Wall Street closed yesterday. An update on what's been happening there, with gains across the board, and tech doing a lot of the upside, with a 1.65% rise on the NASDAQ index. I want to show you this index here on the charts. We've got here yesterday's candle, not as big as the candle on the way down the previous day, and we're holding on the 24-hour markets as where we closed out yesterday's session. Now, since hitting a 4-month high a couple of weeks ago for the Australian dollar against the US dollar, it's all about turn in the last week or two, dropping nearly 4% against the US dollar out overnight. Australia's monthly CPI indicator, another measure of inflation in the country, slowing to a 13-month low. Now, this comes in at 5.6% for the first 5 months of the year compared to the same period this time last year, lower than forecast and down from the 6.8% print we saw in the month of April. And we've got the Australian dollar down against a whole basket of currencies. I want to share the Aussie against the US first of all, down at 66.40. This line of support down here at just below the 65 level is going to be the line to watch out for. If you draw a Fibonacci on where we are from the lows to the highs, you can see at the moment that we are around that line of support at 61.8%. So we get further declines from here. There's a more than likely potential we could well get a full retracement down to the 64.58. The odds of an RBA rate hike have scaled back slightly after the data released today. Markets now see a 30% probability of another 25 basis point hike in July, and estimate that rates are more likely to peak at 4.35% rather than 4.65%. The Aussie is down as well against the euro, and you can see who have broken this line of support at 60.54. Potential there now, I guess, on the way down to a sub 60 level for the Aussie against the euro. So the Aussie is dropping against the European single currency as well, and it's also down against the Japanese yen, scoring a new recent lower low there. So declines for the Australian dollar. Now let's take a look as well at what's been happening in the Chinese economy. Profits earned by China's industrial firms dropping by 18.8% in the first 5 months of 2023 from this time last year. Profits shrinking in both state-owned firms by 17.7% and the private sector by 21.3%. Now, the way to measure this is to take a look at what's been happening with the Chinese yuan, which continues to find the going tough against that stronger US dollar. You can see here in the last couple of days, we've hit their levels not seen since the 28th of November last year. And we're hovering around those recent highs for the dollar against that weaker Chinese yuan, which continue to underscore the problems China's having in emerging from the COVID lockdowns, and nothing like as strong as many have been penciling in at the beginning of the year. We've just seen some breaking news headlines coming through on the German economy. GfK consumer confidence unexpectedly falling to a negative 25.4 in July from a negative 24.4 in the previous reading just a month ago. Economists had expected a rise to a negative 23. So that's not as good as many had been expecting. And in just a few moments' time, we're getting consumer confidence in the French economy. That's forecast to fall to 81 in June. The previous reading had been for 83. And then later on in the day, 1:30 p.m., we got wholesale inventories. They expected to rise by 0.1% in May month on month. But I think for me, if we look at this next chart here, which really is all part of what we've just been talking about in terms of economic data, this is the euro-dollar chart. Got the euro down at 109.44 after rising yesterday. For me, it's not necessarily going to be economic data. It's what is being said at the Portuguese resort of Sintra. It's the European Central Banking Forum meetings this week, sponsored by the European Central Bank. Today, there is one of the biggest forums, meetings, gatherings, discussions, whichever way you want to cut it. We've got a speech by Jerome Powell in a meeting today later on. And that, I think, for me, almost certainly is going to be the highlight today. It could actually well end up being the highlight of the week. I think underscoring this expectation that central banks are going to keep their foot on the pedal. So if that's going to happen, it'll be interesting to see which way the euro dollar jumps. But I think certainly at the moment, at least, the European Central Bank is seen as more hawkish than the Fed, which has done much of the upside on interest rates over the last year. Let's move on to some of the numbers coming through from corporates. And I just want to highlight one story here in the UK. I want to bring up a chart of Boohoo Group. Now, we know that Boohoo has been finding the going difficult, but there is another story bubbling under down here. And it's sort of passed me by to some degree. But Boohoo has come out with a statement this morning. It owns 26.6% of Revolution Beauty Group, which has just come back to the market, which had its first AGM yesterday since its AIM IPO in July last year. And there is the most almighty spat developing between Boohoo and Revolution Beauty Group. Boohoo has said it wishes to record the serious concerns it has regarding the conduct of the board of Revolution Beauty at and immediately following the AGM yesterday, which regards as a self-serving board and not in the best interests of shareholders as a result of the following actions. The unilateral attempts of the company's board to adjourn a quorate meeting without the approval of shareholders present, the AGM subsequently proceeding with resolutions 2, 3 and 5 all being defeated, with approximately 74% of votes against each of those resolutions. And this has resulted in the removals of Bob Holt, the chief executive, Elizabeth Lake, the chief financial officer, and Derek Zisman, chair and senior independent director, from office. Now, this is a very serious breach of what's gone on at a corporate level. And Bob Holt is also the chairman of Totally PLC, amongst other businesses. The conduct of the remaining independent director, Jeremy Schwartz, who post-AGM contravened corporate governance best practice and disregarded the expressed opinion of the company's shareholders. Boohoo has every single right to stand up and say this, but I think it's worth looking at this statement this morning just to look at the language that's being used. Which way Boohoo goes here, I'm not entirely sure, but Boohoo, which owns 26% of the business, clearly wants to stand apart from any of what's happening there following that AGM yesterday at Revolution. But as I said, Boohoo, we've been talking about this all the way on down here. The stock will open at 34.5p. Also, another company to watch out for this morning, UBS. Watch out for those shares at the open. We will open at 17.54. We're below the 200-day moving average for UBS. Bloomberg reported yesterday after the European market closed that the Swiss bank is looking to cut more than half of the workforce at Credit Suisse from next month. Eventually, UBS intends to reduce the total combined headcount by around about 30%, or 35 people across both businesses. Credit Suisse currently has around about 45,000 staff, so we're seeing a shedding of a large number of banking staff. This report follows comments from the UBS chief executive Sergio Ermotti. Just last month, he warned of painful decisions about job cuts to come without giving details of the number of potential layoffs. So this gives us some clarity, and UBS is going to open at 1754. That stock. I think this is potentially a positive stock story because UBS is doing all the right things. It's taken over Credit Suisse. It knew that there was going to have to be some serious job culls, and this has now come through with those Bloomberg reports. Now, in the US, Micron Technology is due to report after the bell this evening. It's an all-session stock, which is why I wanted to highlight it for you. Let's take a look at what we're expecting after the close tonight. Expect the chip maker to lose $1.59 per share on revenues of $3.67 billion. This compares to the figures a year ago when quarterly earnings came in at $2.59 per share on revenues of $8.64 billion. As I said, Micron Technology is an all-session stock. It closed out late last night at 66.32. Since the beginning of the year, Micron shares have been rising following a difficult 2022 where the stock lost half its value. Micron benefited from an improved outlook overall for the chip sector. So you've seen this slow grind higher recently, achieving levels there not seen pretty much since March last year. Another one is General Mills. This company is expected to report earnings before the bell today. Earnings per share of just over $1.07 on revenues of $5.16 billion. It makes things like Cheerios, amongst other things, a number of well-known brands within the milling, and the General Mills is based in the US, but it has many international products on its business. Oil prices fell more than 2% in yesterday's session. Investors are concerned that central banks may not be done with interest rate hikes, and this basically means that there's likely to be a continuation of the recent drawdown in demand. I want to show you the chart here. First of all, for US crude, you can see it bumping along the bottom here, not too far away from the line of support at 66.95. We are at the moment, early part of the trading day today, on this Wednesday at 68.02. If you get a candle close below here, the next line of support is then the lows that we had back on the 2nd of May at 63.76. Yesterday, the European Central Bank President Christine Lagarde confirmed that unless there is a substantial change in the inflation outlook, the central bank will continue to raise rates in July and thereafter as needed. Meanwhile, in the US, consumer confidence rising to an 18-month high this month, suggesting the Federal Reserve will likely have to continue raising rates to slow demand. Last week, you'll remember Jerome Powell, the chairman of the Federal Reserve, coming out saying the market should expect 2 more rate hikes by the end of the year, 25 basis points each meeting, according to market expectations. The Fed chairman due to talk at the ECB forum in Sintra today. Meanwhile, the API inventory data out yesterday had no impact whatsoever on oil prices. Crude oil stocks falling by around about 2.4 million barrels. Gasoline inventories down by about 2.85 million, and distillate stocks rising by around 800,000 barrels. But the big news in the oil sector is just how much demand could well shrink if we see a continuation of interest rate rises, which continues to impinge on the amount of money in the markets. Let's look at one other area of the market where I wanted to pick up on what's happening with the price of gold. I've been talking about this 1910 level, and we're seeing another assault on spot gold prices at this line of support at 1910. That's absolutely where we are at the moment. You can see, I think it's wanting to break this. And in fact, in today's session, we have now seen a new lower low print. We've seen the lowest intraday print now, not seen since the 15th of March. I will now therefore adjust my position on this. My next price target is the 76.4% retracement down at 1870. When we get a candle close below this line at 61.8% at 1910, which is now looking potentially as though it could well happen today. 1870, the new price target. And if you're really bold on the short side, you want to put your stop just above the 100-period moving average, just around about the 1950 level. If you're really aggressive on the short side, your price target will be down here at 1804, which would be the total retracement of this Fibonacci. That's it for me. We're back at 10:30 with Chart in the Markets. Hope you can join us there for that. Do watch out for UBS at the start of the day trade, and also Boohoo.